That's why I think Bitcoin can double from here by the end of January. Now, many people don't expect it because of the 4-year cycle. And that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle.
What did happen on October 10th?
Our company, we are using AI at so many levels. It's not just research, and we are using it to ingest data, but it's really how we manage our data now, and even how we manage our customer service experience. Because Fundstrat has 11,000 RIA and family offices, plus around 400 hedge fund clients.
Crypto markets are fragmented. Wallets are anonymous. Leverage is opaque. And unlike equity markets, there is no consolidated tape that tells you exactly who sold what, when, and why. Tom Lee uses a helpful analogy. Even in traditional markets, explanations are rarely 100% accurate. At best, analysts explain 90% of what happened, with the remaining 10% attributable to background conditions. October 10 is no different. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Well, crypto's had a rough year. It was actually having a great year until October 10th, because on October 10th, Bitcoin was up 36% for the year, and now it's currently, I think it's like flat for the year. So it lost a lot of its gains. I'm still very optimistic because crypto still has its best years ahead. But crypto should have had a good year this year, and it was on track to, until there was a liquidity crisis on October 10th. That was a bigger wipeout in terms of liquidation than any event in history. The most recent one before this would have been 2022 with FTX. And that wipeout pales in comparison to what happened on October 10th. But in 2022, it took 8 weeks before crypto, the smoke cleared, the leverage wipeout was nothing to mirror that crypto prices began to recover. This week is the 8th week since that crisis. And I think crypto prices are beginning to actually recover. That's why I think Bitcoin can double from here by the end of January. Now, many people don't expect it because of the 4-year cycle. And that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle.
What did happen on October 10th? Like, everyone knows crypto markets got hit. It seems unclear to people what actually happened. And as you say, it was one of the largest liquidation events that we've seen in the history of crypto. What happened?
I'm going to give you what we've been able to piece together. And I would say that it's like a 90% correct, because, there's going to be 10% you don't know if there was something else.
Just to clarify, is the reason we don't know what's happening because of the anonymity of crypto? We don't know who owns which wallets, and so it's harder to track what's actually happening?
Well, it's that, and plus, if when we look at liquidation events, like in the stock market, 90% of what someone will explain is probably correct, but 10%, like 90%, it'd be 90% to correct to say that the February to April decline was largely due to the Trump tariffs.
Yes.
But the other 10% would be like, well, stocks were already expensive and they were overdue for a correction. So that's what I mean by 90-10.
So give us your 90%. What do you think happened?
On October 10th, there was 2 things that happened. One was a triggering event, which was Trump announced, a re-escalation of tariffs with China, like a tripling of proposed tariffs. And because markets were closed, historically, crypto is what reflects reaction to a macro event when you're already after market hours. Like if the S&P was open, crypto probably wouldn't have got punched as hard. But crypto prices fell. Now, crypto prices falling, system can handle that because, crypto is a hyper volatile by nature. So large swings in prices shouldn't really overload the system, and even volume shouldn't overload the system, because crypto trades, there's so much automated trading. However, there was an algorithm in place that actually, what I call a glitch, happened on a specific exchange. Okay, many people use leverage in crypto. I mean, it attracts leverage trading, but people put up collateral so they can do leverage trading. One of the collaterals is stable coins. Okay, and stable coins are pretty safe collateral because, hey, if it's Tether, it trades at $1. It's pretty safe collateral. And so you can borrow a lot against safe collateral. And if it was USDC, Circle, that's also a really stable coin because it's backed by $1. However, there was a popular stable coin called USDA. It was an algorithmic stable coin. Okay.
Okay.
And on one particular exchange, because of the shock of Friday, internal prices, like people bid ask of that stablecoin, actually got out of whack. Suddenly, the price went to 65 cents, even though it's supposed to be essentially worth $1. So, but within one exchange, that the quoted price dropped to 65 cents. Well, that meant that all the collateral for every account that used that particular stablecoin to borrow money was now in deficit. Okay, even if it was just $1 that traded at that price, it was already putting every single piece of collateral at risk, into deficit. So then something called ADL was triggered, automatic deleveraging. And so in one exchange, everybody who would use that stablecoin as collateral basically got wiped, their accounts liquidated. Well, what were those accounts long? They were long altcoins and all these different cryptos that suddenly got dumped onto spot exchanges. So then on all these other exchanges, suddenly some altcoins suddenly went down 99% because there was a lot of selling from ADL, but it triggered a domino effect of all these other exchanges triggering other ADLs because spot prices of all these alts dropped. So that to me was a glitch because it was like an illiquid quote that didn't represent a true VWAP, triggered an ADL that triggered a cascade of ADLs. And that led to millions of accounts being literally zeroed out. It won't happen again, I'm sure, because in the future, I'm sure they will use a composite set of prices, or if there's a variance between what's quoted internally versus on spot, or if it's a volume-based measure. So that's why I don't think it would happen again, but that's what happened on October 10th.
Markets are not static. They evolve as participants change. Institutional adoption, derivatives, ETFs, and macro integration all alter market behavior. If Bitcoin breaks $125,000 in January, Lee argues, the 4-year cycle narrative collapses. Not because cycles never existed, but because the market has grown beyond them.
Wall Street itself has actually been a victim of technology because, first, many investment firms have been using essentially versions of AI systems for a long time, right? They've been investing in quant systems and models, and the sell-side firms have invested in technology to replace labor constantly. I don't think there's been a year in my career on Wall Street that money wasn't being spent to actually reduce the labor intensity of the job. I mean, I remembered when I was at JP Morgan, in the 90s and the early 2000s, trading occupied a huge percentage of the cash equities business real estate. It was a couple floors. And then one day went to electronic systems, and the number of traders went to a tenth of a floor. So I think that's the nature of Wall Street, that every job is eventually automated away. And so value capture is shifting around. In the 90s, when I started, equity research was a back office job. It wasn't because I went to Wharton undergrad and I graduated, I wanted to get into research. Firms weren't really actively hiring for research. Research was an apprenticeship industry. You had to find a job and find an analyst that would hire you and take you in. Of course, research has become a much more important business today as other parts of Wall Street became commoditized. But, when I graduated in the 90s, traders were the highest paid people. The sales trader, they were like the masters of the universe. And of course, now it's just computer code. So I think you're exactly right. In the future, a mediocre research person is not going to be any better than a mediocre OpenAI or LLM, right? So Wall Street needs to constantly evolve. I know that at our company, we are using AI at so many levels. It's not just research, and we are using it to ingest data, but it's really how we manage our data now, and even how we manage our customer service experience, because Fundstrat has 11,000 RIA and family offices plus around 400 hedge fund clients. So but the way we manage them and identify their needs, we are using AI. So I would say I have not found any of the AI models that have been shown to us and that we trial, because everybody wants Fundstrat to adopt one of their models, has not been good at stock picking. We actually run 3 ETFs. Fundstrat Capital has Granny Shots, GRNY, GRNJ, which is a small mid-cap version, and GRNI. But GRNY has a 1 year of history, has outperformed the S&P by 800 basis points this year. And none of the AI systems that have been shown to us have actually outperformed our own process for stock picking.
Well,
Give me the last 12 times something happened. That is AI. But as you know, to do true training, then you need to have it work in the future. Now, future has not a binomial outcome. It's multiple forward scenarios, and the probabilities are unknown of each future event. Okay. So you're dealing with so much uncertainty that I don't know how a probabilistic way to give you a single point answer would ever work. I mean, to give me an example, someone will say this is the fair value of a stock, and they say this is the PE and this is the E. And I can never understand that, because I'm always wondering which E are you using, and you know what I mean? Like, because price is today, but then which forward metric, and then how do you discount it? How do you explain to AI that you have to look at 10 years of future earnings, but you don't know which future earnings will actually matter the most? And then how do you assign the weights? I mean, that's really what we do at Fundstrat, is we're constantly assessing the probabilities of future events and then deciding. We do have to pick a direction, right? Then we say this is the path we're going to take, but it's a guess. So I think that the best qualities of a researcher, at least in my opinion, are you do need to be unemotional, but you also need to know the difference between conviction and being stubborn. Because stubborn is riding something and believing in something when all the facts have changed. Conviction is basically riding through the volatility, and it's not easy to tell the difference until history has already passed. And I think, the third thing that's really important in markets is to know what's already priced in. I don't know if AI is going to really have a good sense for, like, if AI is the only thing managing money in the future, I think a human will beat the market, because all the AI systems will be predictable. You know what I mean? And then you can spoof them all. So that's really where I think human judgment matters, because, I'm constantly surveying our clients and I'm in constant touch with them. So I kind of know where the money is and what the bets are and how they react to the Fed. And I don't know how you can program AI unless it is, well, they'll get very good, but they really have to think not just on a specific outcome, but on a series of future outcomes. And that's what we're always sort of obsessing over.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.